Hello, everybody. I thought I'd do a video today instead of, pictures and text. So, wanted to just kind of look at indexes in general because there's been a pretty big shift, as we all know, in recent months. Because it wasn't that long ago where we had a straight up, no questions asked, no doubt about it, bull market on our hands. I mean, I've zoomed into a particular portion here through 2016 and 2017, just up and up and up and up and up. I mean, the most severe downturn might be like 1 or 2% here and there, like so, just a little bit of a breath. But on the whole, just relentlessly powering higher. Sometimes with incredible gusto, like early in 2018. So that's what a bull market looks like. It goes, as our friend Dennis Gartman says, from the lower left to the upper right, and very smoothly. Hasn't been that way recently. It's been a bit of a mess. You can see here, we've been whipping all over the place violently. And with my little markups here, you can get a little more insight into that. This is the S&P 500, and at this distance, you can see that the events that have been taking place have been most notably a big plunge from round about late September of last year, all the way down to the Christmas Eve bottom, and that was a pretty big wipeout. So there was serious talk about 3,000 on the S&P, and we got down to almost 2,300. And of course, by most measures and most indexes, had about a 20% drop in indexes, and therefore, for some magical reason, people were officially able to call it a bear market, and then we reversed. And more recently, that reversal was incredibly powerful. It went from the 26th of December up until really last Monday, the 4th of March. And then most recently, we last week, we pretty much slipped. So we actually hit our maximum counter trend peak on last Monday, but we fell. And then we fell a little more, and then some more, and then some more, and then some more. And then today, we pretty much undid Friday, Thursday, and Wednesday of last week. So it's this real quagmire at this point. So the general point being that we've gone from just a anything goes up, 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 up rally to this more of a two-way market, sometimes some violent swings, and some days like today where there's a need to be any reason for the market to go up. It just sort of went up because it went up, and not because you can point to anything specifically. And so on the S&P, what I've been focused on has been this range. The blue at the top, 2816.94, and the red at the bottom, 2603. So around 2600 to around 2,800 and change, around a 200-point range here, which pretty much has hemmed in almost all the trading activity over the past 14 months or so. And there's two halves to that. I've divided it with this gray line. We've got this upper half and this lower half, and we're bouncing within the upper half right now, and we've been doing so ever since February 12th. And today was a pretty powerful bounce from the weakness we saw last week. So the key here for the bulls is to get above this level, this blue line, more particularly and more powerfully to get back above this broken, very long-term trend line. As you can see, even with the powerful counter trend rally, it never closed. It actually hasn't closed above this line since the trade truce back on December 4. Yes, we've pierced it here and there with highs, but it has not closed above that line, which goes back a full, at this point, 11 years running now. In the course of today's explosive rally, the VIX got mushed. We have actually in the span of about 10 trading hours, we've gone from 1833 down to about 1433 approximately, And so just a massive wipeout on there, about 20% drop or so in just from Friday to today. And we're getting back down to the lowest echelons of where the VIX has been for years. Looking at a few other odds and ends, here's the Dow Jones Composite. And this is very similar to the S&P 500 with respect to the upper portion, 8669, the lower portion of the range, around, I'll call it around 8,000. And then this middle line, which we bounced off of on Friday and undid last week's Wednesday, Thursday, and Friday drops. So once more, for the bulls, their success would be predicated upon a successful crossing above 8670. And for the bears, they get another shot if they can break this middle line at around 8350. Who knows what it's going to take? I mean, obviously there's a lot of potential pushers in either direction. There's the trade deal or not. Earnings is still about, a month off, so that's not even worth kind of thinking about at this point. But so I guess the big question is the whole China trade deal thing. But it is sort of absurd because if you look at it, the government budget they just rolled out assumes, and it's a laughable assumption, assumes that for years and years on end, we're going to have 3% GDP growth every single year. And the latest data indicates that even in the forthcoming year, it'll be more like 0.3. And remember, we've been kind of on a bullish roll for a while here, so there's a lot of steam in that engine. So, fantasy world, yeah, totally. What else? Take a peek at a couple of others before we say goodbye. Here's the Russell 2000, and we're well below the danger point here, 1602. We had a lot of weakness last week on this, but as I've been mentioning, the notion of an inverted head and shoulders here all along this area is still real, and we would need to break this trend line to dispatch with that. We need to get below that trend line again to do away with that prospect. And for the bulls, that they would meet with success if they cross above 1602. And what should we finish up with here? Just kind of looking it over. Well, you know what? There's been a lot of strength in the Nasdaq, so we'll take a look at that. Apple was a big leader here today, but the CompQ, the Nasdaq, both quite strong, and this is way closer to a breakout than the Russell. And so its own horizontals at 7205.94. Let's call it 7206, and we are just a good sneeze away from that at this point. Very, very close. So for the Nasdaq, at least Tuesday could be a pretty important day in terms of managing to cross that or not. So surprisingly quiet day for me. I mean, I'm still in position on almost everything, and we will just take it a day at a time. So thanks, and I will see you later.